What do we really mean when we are talking about investment? What is this investment conversation all about? What is investment really? These are the questions that we'll be answering in this episode of Fearless Business. Welcome to Fearless Business, and it is wonderful to have you here all the time. I mean, whenever it is that you're watching this, it is the right time for you to be engaging with this content, because here at Fearless Business, we have the conversations that you will not have anywhere else. You can trust me on that. Just take my word for it. I said it. It's true. My name is David Sijenyi, and this is Fearless Business, sponsored by the Mavuno Church Movement. And this is a conversation about helping you align yourself to your kingdom assignment as a business person, but also as a marketplace leader. Wherever you are positioned, whether you're serving as an entrepreneur, running your own vision, or as an intrapreneur, serving in someone else's vision, you have a very specific role in that space that you are in. And this is where we help you align that conversation. Fearless Business is about mindset transformation, shifting the way we think about the situations we're in the marketplace today. Now, Jesus said to his disciples, I'm sending you as sheep among wolves. And he says after that, therefore, be as meek as doves, but as shrewd as serpents. As you think about this statement, what was he referring to really? When we think about the business environment, it sounds very cutthroat, very non-compassionate, very without grace. And when you operate in that space, it feels like you need to be a different person. But we're saying that as a kingdom agent, you are exactly where you need to be for the purpose and the assignment that God has set out for you. And so as we have this conversation, we started last week with an interesting conversation with an amazing gentleman in the investment space. And this gentleman started as an architect, then he became an accountant, and today he is a financial advisor, but also partnering in the investment space, especially in real estate. Ladies and gentlemen, this is none other than James Kaniaru. Karibu sana.
Thank you so much, Shinji.
It's great to have you back.
Yeah, wonderful introduction. I was wondering.
Oh, yeah. Well, I specialize in those ones.
Right.
But more than that is really just the amazing conversation we started to have last week. You know, as I'd never imagined that just unpacking one person's journey could have such powerful lessons for us. And I like the way it really concluded with the understanding that an investment was made. Two things we talked about was an investment in education and an investment in your spiritual journey, in your faith. Today I want us to take us further. What is this investment really? I think people talk about investment. People even have invested, but what really is this investment? If we were to ask some of these people, what is this investment? They're like, well, what is investment? And I think, tell us, help us unpack this in very simple layman language. What is investment?
Yeah, thank you once again for the invite.
Yeah.
I really appreciate being here.
Karibu.
And I appreciate the work that you are doing. You and your team are doing here at Fearless Business.
Yeah.
Investment basically is forgoing current consumption to put aside money for future consumption. That's all it is.
Forgoing current consumption
Yes.
for future consumption.
For future consumption.
Okay.
So any decision that you make, even saving, is part and parcel of that whole investment, because it says,
Right.
I'm not going to spend everything that I receive today. I'm going to set aside a bit of it so that it then meets a future need.
And I think that's a critical starting point, that I'm delaying my gratification today
Right.
for a future purpose,
Yes.
or for a future need. Maybe unpack that a bit more for us. What does that really, for the person who's probably been putting money aside and asked, what are you doing they have not had the words for it. Well, what does this really mean and look like as we do it practically?
I think at its very simplest, think about someone who earns an income and basically gets paid on a month-to-month basis. There are certain expenses that will, certain expenditures that will be spent every month on a month-by-month basis. They'll have to buy food, they have to spend money on transport, they may need to rent a premises, and they have needs that recur with frequency on a monthly basis. However,
And these are important things
and those
to spend money on.
Yes, because you need to.
Yeah.
You do need to spend them. And really the purpose of money is to help you meet part of those daily needs. But there are certain needs that you have that don't occur with regular monthly frequency. For example, if you have children and they go to school, you don't pay school fees every month. You pay school fees thrice a year at the beginning of the term, which is approximately once every 4 months.
Yeah. Even though I found out that when you pay every month, it gets out of your way. You kind of sort it out somehow. It's something I discovered as doing this life thing. You learn things as you go. Yeah. So it's one of the ways you could do that is actually you could pay to the school instead of just putting it aside and eating it. You could pay to the school. But
That's right. And I love that because then for many people, what happens is they're very moody around about in May and September because all of a sudden you have this very big expense that you had not budgeted for or set aside money for. So I love that plug. You can actually split any of these expenses that are not incurred on a month-to-month basis. You can actually split them into monthly and even pay them in. And I think the school appreciates that.
And many times when we think about payment plans, we think about after the fact. It's already due, so now we are paying in installments. But there's a situation where you can actually be paying in advance for next term because you have the money now. You don't know about next term. You don't know about January. So the money you have, you then put in there as apportion it. I found that to ease the burden a bit as we
And so I can tell you've been in business because this is basically a business matter.
Yes.
Because you've got this big lump sum payment that comes in, and you want to pay because you don't know when the timing for the next payment is going to be.
That's right.
So it's actually an excellent way to do it. But nonetheless, even in that, even when you do receive a lump sum, there is just a reality that some expenses may not, for example, I guess you can't pay your car insurance in small tranches because they don't know what to do with that money.
Well, in advance, yes. But currently they give you 3 months. You can payment. They give you premium finance, or they can allow you to pay it installments. But they give you a limit. The limit I think currently is 3 months. Within 3 months, you need to have sorted that thing out in full. So, however you break it down, that's up to you. But by 3 installments maximum.
So you see that basically then as we're talking about the whole issue of foregoing consumption, today is there are certain expenses that you would have to spend on regularly and are sort of basically timed with your income. And then there are certain expenses that are out of sync with the timing of your income. And therefore that needs some bit of foregoing or some bit of advanced planning like CJ in order to put aside cash for it. And then there are other expenses that you will not incur because, one, the timing, because of timing issues, especially uncertainty around timing. I'm taking, for example, here a health situation. Whereas we all want to plan in advance, what happens if you have a health crisis that requires a big amount of money? You know what it costs to be admitted, for example, into our hospitals right now.
That's right.
So how do you set aside money for that when you cannot tell whether this is something that will happen or even when it will happen? And then there are certain things that you know will happen, but they are so far in the future that for many people they forget to actually plan for them. And here I'm thinking of something like retirement.
Retirement, yes.
Because we
voluntarily. Or otherwise.
Even involuntarily. You're really a businessman. It's for businessmen because you do not know. So there are a number of things. How do you plan for your retirement? Why do you set aside why do you forgo consumption today for when you'll be in your 60s or 70s?
Yes.
How much will you need in your 60s or 70s to meet needs at that point in time? You are not aware. If you did have a medical situation that did occur for you or even a family member, how do you set aside cash for that? So the whole issue about foregoing consumption is basically for either known or even unknown future expenditures. And basically saying, I'm going to not spend everything I receive today, but I'm going to set aside something so that at some point in future, I do have the resources that I would need in order to meet that specific need.
All right, I really like the direction you've taken, because I think many times when I think about investment, we think about what we do with the money we've set aside. But I like that you've started it from, first of all, is foregoing current expenditure. I'm curious, what expenditure are we foregoing, and how do we even go about determining what to forego? Because I think there's a misconception about I think there's a struggle about what to forego and when to forego it. So what am I foregoing? There's all these things that are waiting to be spent on. There's some real issues. My rent is due. My car needs servicing and fixing majorly. Right now, it needs a major work. Anyway, my house has things to be repaired. There's all these things are real expenses. Currently, how do I decide what I'm foregoing? How do I even start to forego?
I think at its essence, investment meets a specific objective. And I think it's very difficult to invest if you don't have a set objective in mind.
Okay.
So take, for example, Pastor CJ. Pastor CJ.
Yeah. One Pastor CJ. Yeah. Yes.
Whose car is having certain issues and he knows that it requires some work. He has.
Are you taking this opportunity to hit anyway? Can't bother. All right, let's go.
So it requires a bit of work.
It requires a bit of work. It requires a lot of work.
Stuff.
Yeah.
You can see, for example, you've been having discussions with your wife. The fridge is looking like it's on its last legs and you need replacement at a point in time.
Yeah. Actually, it's the freezer and it doesn't have legs. Okay. Yes.
For this hypothetical.
It needs legs. Yes, for this hypothetical. It needs to go.
It needs, and that sort of tends to happen. And then on top of that, there's school fees. There is I need to fuel, get transport myself. I have wider family responsibilities. As a believer, of course, I know you have tithe.
Yes.
That is first. So that on
there's tithe, and then there's sacrificial
giving.
There's
sacrificial giving.
Yes.
And there are needs. There are continual needs that we come across from day to day. So you have this whole big basket of expenditures that you have.
Yes.
And the only way you can make sense of that expenditure, and then of course, hypothetically, you do also have an income.
Yes.
Because that's the other side.
Yes.
And that income could be regular. It could come daily. You could be a border rider. It could come. You could run a shop.
Yes.
It can come daily. It can come weekly, monthly. It can come in lump sum.
Yes. Periodically.
So you have
where period is anytime between January and December.
Exactly.
Yeah.
And I think I like that word, period, because every income or every expenditure is tied to a particular period. What you then need to do is, once you've assessed your income, and which basically gives you the resources that you have available, and you've assessed your needs, your financial needs, which also have you need to now align those periods. And that's basically what investment is. As you remember, I said there's some needs that are monthly, there's some that come maybe regularly in a year, and there's some that are indeterminate future.
Yes.
In a sense, you don't know the quantum of the need and you don't know the timing.
Yes.
And then there are some, and I think it's even with retirement, though it is sort of known when that will happen, you don't quite know the quantum of funds that you actually need.
Yes.
So basically, you bring your resources and your needs in alignment through aligning them to correct periods in time. So, of course, one of the things that you want to do with your income is recognizing that you can't eat all of it today.
Okay.
Because the other needs come in tomorrow.
Okay.
Which means I have to forego. And that's where the whole investment basket comes in. There is also, I think, a realization, and good economists will tell you this: we have unlimited wants and limited resources. So, in the reality, in this whole basket of things you don't do, there are some things you can do, and there are some things that you cannot do.
Okay.
So you need to ask yourself, if those things are really important and I need to do them, can I do them? Is it easy for me to do them alone, or should I also find other people to come alongside me and help me do those things? And then are they the ones which I can do on my own? And then are they the ones which I just cannot do? And I need to find a way, a creative way of dealing with those issues. They're still wants, but they cannot be met with the resources that you actually have. So time, income, expenditure, time period, all those are factors that come into investment. There is, I think even in terms of income, the fact that income and money also has a time value to it. So when the money comes, matters. So sometimes someone who's earning a small regular salary is sometimes better than the entrepreneur who is earning this huge lump sum. It takes him 5 years to get paid. And in that 5 years, he really has nothing coming in, but he has all these expenses going out. Yet this person who then earns regularly is able to meet those needs. So time is a very important dimension, even in terms of investment, in terms of saving, in terms of spending.
All right, so very interesting. You talk about several things there. You talk about time, you talk about the just how many expenses and you determining which expenses to forgo. But I'm also hearing you setting aside portions of the resources of the money that's coming in. I'm curious how this connects to objective, because you mentioned something there about objective. And how does objective come into this whole seeming decision-making conversation around this?
I think objective is basically at the center of it, because you want to, I think if I sat and looked at your needs and my needs, my freezer has legs, so I don't need, it's not a need for me, but it is a need for you. So it could be part of your objective to replace that item, whereas it may not be mine. Mine may be something different. So the issue is, even with all these wants that we have, and some wants can be for things that are for now, some may be for things that are later. Each of us has a very unique set of objectives that we would wish to meet. And we also have a unique set of income or financial resources that will enable us meet those needs. So basically, in terms of objective setting, you're just basically saying, what do I have in my hand? What do I need to expend it on? And how do I then align this on this hand and these many needs on the other hand?
So I'm hearing an aspect of I must have clear objectives. And I think this really connects with something that our previous guest was talking about, especially in terms of thinking, when you think about your risk and the uncertainties. We cannot do the same investment if our objectives are different. We can end up investing in some of the same things, but our approach and even the level of investment, the level of engagement will differ based on what it is that we are looking to achieve. So I'm hearing you talk about clarity in investment is first about being clear about the objective for which you're setting money aside. Why are you foregoing this and towards what? But I'm hearing an aspect of you saying, first it's about the foregoing. I'm still not hearing where the investment comes in, or is that the investment?
In foregoing is then where you get the seed that you're then able to invest. Many of us are not able to invest because we live above our means. So we do have income, and sometimes it could be very high income. But then our needs tend to, or our wants tend to outpace our income. In essence, investing at its core means that I have to live below my means, so that I then have something that I can set aside to meet those future needs, which may be proximate, close by, or maybe in the indeterminate future.
So live below my means so that then I have the seed. So let's talk about this seed. I received this seed. What do I do with it? Because I think there's many people who have all this forgone resources sitting in accounts, some under their beds as they lose value, and that's a conversation we'll have as we go along. Some in different spaces, some even in storerooms, where they've put this money and they say, I'm investing for the future. Are they really investing? And how does that differ from what we need to be? Because you're talking about a seed, and so when I'm just keeping that seed and I'm taking, let's just use the literal seed. I've got seeds upon seeds in granaries, tons and tons of it. Is it useful to me when it's just sitting there?
I think that's why objectives are so important, because if you don't have a set objective, then it's very difficult. Even when someone would come to me and say, okay, you're investing, please give me a bit of advice. What do I invest in?
What do I invest in?
That's what do you want to invest for? Because it may be...
So before we can ask what do you want to invest, what you need to invest in, the first question must be, what do I want to invest for?
Yes. What is the objective? What is the purpose of this investment? Because unless you have a purpose, then investing doesn't make sense. And so investing plans look very different for different people, because we all have different objectives.
Based on clarity of objectives.
Of your objectives, yes. So what do you want to achieve? If, for example, someone has a property, let me say, has been bequeathed a property that generates him 200,000 a month, and his living expenses are at 50,000 a month, it's very hard for me to go and explain to explain to him why you need to invest, because his needs are already so way below. And then he knows that there is this promise that this money will be coming in, or this income will come in for the longest time. So he may not, his need for investment may be very different from someone for who it's inverted, who has needs of 200,000 and income of 50.
Anyone needing to bequeath me anything, it needs to give me a return of 200,000.
Right, at a minimum.
Dollars. Okay. So I like that. So it's an aspect of clarifying your objective first before you even start to put money
aside.
That's a complete shift in thinking, because it says, some of this money we've put aside, or we've even put into investment portfolios, if there is no clear objective, then it's just money. It's just sitting there. What are some of the dangers of not understanding this?
I think the biggest I would see is that, and I think it happens for many people, is that we are running a rat race, trying to accumulate, but you're not really very clear what you're accumulating for. So accumulating becomes an end in itself. Because investment has an objective. If there's really no objective, then it's just spare money, then you really don't need to be investing. And then also, if you're not clear about your objectives, you will keep on chasing money and more. But it really has no end objective.
So money becomes the goal.
It becomes a goal.
Which is a problem, because as we have understood through our learning, money is actually a tool for various assignments that we have, that God has given us here on earth. Interesting. One of the things I once talked to a friend of mine, and I was like, you need to consider investing. He's like, absolutely not. Why? That's just conmanship. That investment thing is conmanship. And the truth is, people have lost money.
They have.
In the name of investing. What are some of the things why is it that people find themselves losing money in the name of investing?
I guess there could be a number of issues. The two that are top of mind is ignorance. you know, everyone, there's always quail or dragon fruit or some other, or crypto or something that's making
or
people...
bullet chilies.
Yes, bullet chilies that are making people a lot of money. And,
or matatus.
Or matatus, yes. And there's fear of missing...
Matatus are our public transport here and there. There are people who've made some good fortunes from just running those.
But there's fear of missing out, because then everyone talks about this great investment idea, and everyone seems to understand it, and you're there and you have no idea what this thing is. And I think that that fear of missing out can be a very big impediment, and it comes about either because of lack of education, and sometimes also arises out of our greed. Because if everyone is making it, then you also want to be part and parcel. You also want to be part and parcel of that whole idea.
This is my season.
That's my season, and I have to make it. And I think the other big risk, I hope I've answered the question, is also the whole issue of just that education, because it's that fear of missing out, greed, which is one factor that causes quite a bit of a challenge. And then the second one is just, so you invest in something that you do not understand because you're afraid to miss out, or because the return sounded so good. Everyone is talking about it and I want to jump into it. And the second one, I think, is just that, and it's almost sort of related, is the whole issue of education. We do not spend enough time teaching our children, teaching our young people about the whole aspect of investment. And therefore people come to it with a bit of a skewed idea. I remember a couple of years ago, when IPOs which is basically initial public offerings of shares, were very big things on the stock exchange, and everyone wanted to buy anything that was called IPO, because IPO was supposed to be the route to millions.
To millions, to wealth.
5 times, 10 times return.
Based on the stories of one investment, one financial institution, who we shall not name loudly, that made millionaires. Out of just going to an IPO. But the reality is not every IPO, and you know the examples are there, made people wealthy. So you can't say because this IPO did this, therefore it follows. So I think sometimes in our education we are very simplistic in the way we look at investment. We sort of tend to think of investment as a one-way bet. In investment you can make money, but by the same token you can lose money, and a lot of it. So it's not a one-way street, which is why you need to have proper education. That's why you need to have the correct advice. That's why you need to take time to understand the whole issue of investment before you begin to put your hard-earned money. If your goals, whether proximate or in the indeterminate future, are important for you to achieve, then you cannot lose your investment. You cannot actually lose your investment. You want to be sure that you're putting your money where you actually are pretty confident that it has the likelihood of enabling you meet your future needs. But I mean, people seem to be making money from Uber. People seem to be making money from M-Pesa. Why shouldn't I go into it? It's already, evidence seems to say this is where the money is. Why shouldn't I go into it?
I think we live in a bit of a world of smoke and mirrors. I always tell people, what you see is often not what you get.
Not what it is.
And you guys know it. In this age of social media, airbrushed images and all that, and you see this photo and you think, wow, this person looks so good, and until you meet the real person on the other side. I think sometimes with insurance, with finance products and investment products, what they claim to be able to do, they do not do. And that's why you have to really be careful. One of the big dictums that we have in investment is that past performance is not an indication of future performance. Just because
I thought they just write that.
No.
I thought they just write that in some of those, because normally it's subscript.
It's actually subscript, very small. But it's in font 1.5.
What does that really mean when we see that?
It just means because quail eggs sold at 300 when they came, doesn't mean that they'll be at 300 tomorrow. Because avocados were selling at 30 bob a piece when the people started planting, doesn't mean that they'll be that way tomorrow. Why? Because we live in an economy where prices and outcomes are often determined by supply and demand. There are many other dynamics that affect any specific area. For example, for quail eggs, you could make 300 when there were so few, because there were only 2 farmers, or there were 3. I don't know how many there were. And then until CJ and his all his family and James and all his family decided to get into quail, and all of a sudden you have 1,000 quail farmers, you have an oversupply of eggs, prices are going to change.
Anytime you hear someone talk about quails, they have burned their fingers. Okay. Yeah. There's an interesting concept I had you mentioned. I think it sounds better in mother tongue. Tell us about that concept, because it sounds this thing of mob mentality. People seem to be going this way.
Yeah.
Let's just go with the flow.
Right.
Why shouldn't I, as an investor, first of all, you must tell us what that concept is. Then why should I, as an investor, not be caught up
in that? Okay. Yes, I think I was telling Pastor CJ about a song. Actually, it's by a guy called Musaimo Wanjeri.
Musaimo Wanjeri.
Yes, and it's called Mugerekanyo. It's an old song, but it's a very interesting song because it says something like, in the chorus, it says, if you hear that someone has gone to steal, you also go to steal. If you hear this guy is ngettering people, or basically jacking people in town, you also do the same. If you hear he's become a broker, you also go and become a broker. So it's that thing of
worshiping the devil.
Yes, even you also do the same.
Whether if you see he has, or not.
Yeah, but he also had said that if you see your neighbor has borrowed money, you also go and borrow money, even though you don't know how you're going to repay. It's a very interesting concept. You can Google it, Mugerekanyo. It's an interesting song to listen to. And it's really just around that thing of, because we don't want to invest enough in education or to spend the time in building our knowledge in the area of investment, we'll basically just look at what CJ is doing, what Jared is doing, and we'll then do what they do. Because if it worked for them, then it's going to work for me. But there's no shortcut to investment education. You have to do the work. What you see out there often is not the reality. So people are making money in Uber. Have you spoken to enough Uber drivers to actually ask, are they all making money?
Or owners.
Or owners of Ubers. Or did you just take that one example of someone who probably had done a lot of work to make it make sense for him, and he sort of cracked the brief, and you take that as a representation of this whole entire sample of people who are really struggling? You'll be surprised to know, CJ.
Yeah.
Right now, when you look at something like the stock index, one of the major stock indexes in the US, stock indices in the US is called the Standard & Poor's 500. The Standard & Poor's 500 has the 500 top companies. By I think they weight it somehow. I forget whether it's by value or by capitalization. And those are the top 500 companies that are traded in the New York Stock Exchange. Right now, 7 companies, make up 33% of the S&P 500. So let me tell you about the other 493.
What does that really mean?
In terms of value.
Yes, in terms of value.
In terms of value, companies. Yes.
Wow.
There's a metric I recall reading sometime that says, in terms of businesses, 95% of the businesses that are set up today will be dead in 5 years. So someone sets up a business, it doesn't mean that is, some succeed, some do not. They also say that if you take a whole universe of global companies, the top quintile, the top 10% make 80% of the value, about 80% of the value in a specific industry.
Wow.
So if you have 100 companies in an industry, the top 10, the first 10% make 80% of the money that industry is making. What do you think that means for the bottom 10? Or even for this, how much are they making? They basically share. The other 90 share 20% of the return.
Wow.
So just because you see something and it looks to be doing well, doesn't mean that it necessarily is. And that's why it is important, for example, even when you're investing, to understand what is the dynamics of this market. If I'm investing in this particular stock or in this particular property or in this particular, you need to understand the dynamics of that whole sector. You need to understand the position of that specific target company that you want to invest in. And you need to understand what its future potential is likely to be. Right now, if I just bring it down just as a simple example, even in terms of avocado farming, which has become all the craze here, and everyone is out there planting avocados because the price is very good for
be
avocados.
Careful which seed you're planting.
Yeah, very careful. But the reality is we probably have had such significant planting of avocado right now that you can realistically forecast that in the next 2 or 3 years, when now this crop of trees that are planted begin to bear fruit, that you'll actually see the price nosediving. Because it's just simple dynamics. Because unless people are eating more and more avocado, you've got a finite market. And then if there's all this supply coming to the market, it then means that you can reasonably expect that the price is going to drop. Because if there are so many avocados, why should I pay 30 when I can actually get them a bit cheaper? So you have to, when you're investing in any sector, understand the sector, understand what drives the sector, where does it derive its return from, what are the demand dynamics of this sector, what are the supply dynamics of this sector, and how do those interplay into the future? So that then you can begin to see, because remember, when you're investing, you're foregoing consumption today for a future.
A future, yes.
So if I'm foregoing consumption today to plant avocados, in the expectation that the price 3 years from now will be the price it was before, or even like in my sector, I'm saying let me forego consumption so that I can invest in houses, in building houses today, which take 2-3 years to actually get completed. I'm not building for the market today. I'm building for the market 3, 4, 10 years in the future. And I need to understand that. And there's really no shortcut to just doing the hard work when it comes to investment.
So I'm hearing, one, clarify your objectives. Be very clear what it is.
Very clear.
Then begin to look at your expenses and decide, what can I do without for now, so that I live below my means, so that whatever I'm setting aside is significant enough. But not just set it aside, but consider it as seed. To then begin to plant in the right ground.
That's right.
Very critical. To then be able to reap a harvest. And I guess this brings us into the kingdom mindset that we need to have as we invest. How do we need to think about investments as believers? Because I think sometimes we're very, is the word nonchalant or callous about the way we think about investment. How should we think about it as believers? What does a kingdom mindset look like when you're thinking about investment?
I think a couple of lessons, and I think the Proverbs are really a great place to start, because one of the biggest examples actually of investing in Proverbs is a very tiny creature. It's an ant, the tiniest of creatures. And it says, the writer of Proverbs is advising that you should go and to talking to the sluggard and saying, go and learn from the ways of the ants, how it saves, how it keeps aside for winter. It knows that today there is food, but tomorrow there may not be. So I need to keep aside. I need to work diligently.
In fact, it's an almost guarantee.
Yes.
That as surely, there's a statement I started making a while back, as surely as the sun shines today, there shall be rain tomorrow. As surely as it's a guarantee. Tomorrow may not be exactly tomorrow, but you can be guaranteed if the sun is shining today, we're going to have some rain. Just again because of the process of condensation. So just realizing, if today there's food, tomorrow there will not be. And I guess I'm just shifting that for almost to make it a guarantee that there's going to be a time when it's going to be. We
go through, life happens in seasons. There's dry seasons, There are seasons of plenty, there are seasons of...
And I think that's an amazing mindset to have as you think about why to invest. More like putting a case for investment.
That's right.
Life is in seasons.
Yes.
Today you're up.
Yes.
Be sure.
Yes.
Tomorrow there'll be
There's
down.
a down coming.
And not that, and how that down impacts you.
Yes.
Is based on how you manage.
Yes.
That investment.
Exactly. Exactly. So I think that's just the scripture calling to us to be wise with what has been placed in our hands for our current needs, yes, but also for our future needs. I think there is one of the other drivers of investing is, apart from just looking at your expenses, is also looking at your income. You know, it says, cast your bread upon many waters, and talks about build other streams of income.
Yes,
7
to 8.
Yes.
But it's actually have 7 streams. In fact, 8
yes.
if you can.
If you can, because you don't just invest or put everything in one basket. It just talks about diversification, reaching back to what you were talking about with Sam Kibara about the whole issue of risks. That we diversify because we do not know what the future holds, because the future is uncertain. But I think Scripture also calls us to have that foresight to actually see that because of the uncertainty of the future, that we need to be wise to keep aside today in the time of plenty, so that it can actually help to meet in those future times of need.
I think a powerful scripture that comes in there is Genesis 1:28. When God is saying, be fruitful, multiply, fill the earth, subdue it. And I like the other version that says, and replenish it.
Right.
Which means it's not just for you to deplete, to just consume, and take. But there's an aspect of you making more out of what I've already given you.
That's right.
Be fruitful. Everything God has set out there has the capacity in it for fruitfulness.
Right.
And I think for me, that's the anchor of this whole conversation, that we are stewards and not owners.
Yes.
And we must come from that place of realizing this thing about investing is just walking in obedience to Scripture and our understanding of who we are. Where then do we get this knowledge? You talked about education. Educate yourself. Where then do we get this knowledge?
I think we live at a very interesting time when there's so much information available to us on the internet.
Yeah.
And I think it's a great tool because it's basically got tons and tons and tons of information. I think if we learn how to harness it to its best, there is way too much information on the internet. I use it a lot myself, even in researching certain things, and I'm always amazed by how much information is there. There's also a lot of I call it rubbish in the internet. And so if you want to spend time on the internet watching the rubbish, it's there.
That's
if you want to spend time looking for the information, it's actually all there. I think that's one thing. You can learn from people. And I always think a good rule of thumb when you're talking about investment, and even when you're coming for advice for investment from anyone, is to find out whether they've invested in it themselves. Because then they're not talking to you from a perspective of book knowledge. They're talking about practical experience. So talking to people who've invested. If you're interested in real estate, talk to people who are already in real estate. If you're interested in stocks, talk to people who are already in stocks or in bonds or in whatever investment that you look at. If you want to invest in avocados, talk to people who are there. Even that Uber. If you want to invest in the Uber, talk to someone who's actually there.
Who's invested in it.
Yes, they'll actually tell you the good, the bad, and the ugly about it. So talk to people, seek sources of information. And there's also a lot of courses online. There's a lot of courses that you can do through physical classes to skill you up and teach you about investment. If it's going to be a lifelong thing that you'll be investing, because God gave us dominion over this earth, not for as many days as we're here, we're supposed to be, the mandate is still there, multiply, be fruitful, take dominion. You need to continually have that learner mentality. That teachable spirit that enables you to keep on learning new things. So you need to also have look for information wherever you actually find it.
A friend of mine and mentor says that the only money that is yours in your expenditure list is the money that you set aside for the future. The only money that you can lay claim to is the money you set aside for the future. The richest man in Babylon says, pay yourself first. And the paying yourself first is the saving. Because that money that you're foregoing today, that money that you're setting aside, is the seed for your future. It's the seed for your multiplication. You see, when you do a list of your expenditure, everything else has a different owner. You're not paying yourself, and we call it modern day slavery because all those expenses used to be paid for by a slave master as you worked for them. They gave you housing, they gave you clothing, they gave you food, they ensured you could go to hospital, they ensured you could move yourself around if you needed to. They took those expenses. But in modern day, we give you the money. And it's genius because we give you the money and you decide the level you want to live at in that modern day slavery. So some of us choose it at a lower level, some of us choose it at a higher level, but all the money you make mostly belongs to other people. The rent belongs to the landlord, the money belongs to the power company, the internet and communication money belongs to the telephone company, and the truth is, the only money that's yours is the money you preserve. That's the only money you can grow and impact. My same mentor, Apostle Moses Mukisa, says that there's something we call the wealth cycle, and it has three sides. On one side, you have making money. On the other side, you have keeping money. And on the third side, you have growing money. The truth is, you cannot grow money you have not kept, and you cannot keep money you have not made. And so it starts with earning. But as you're earning and you're working hard to earn these resources, what are you doing with it after that? The only money that's yours is the money that you keep. So before you invest your next shilling, pause and ask, do I understand what I'm stepping into? But the starting point is in knowing. Set your objectives and then take time to understand the different investment platforms and be clear about what you're doing. One of the ways you can do this is engage with an investment expert or someone who can walk with you in that space, like James here. I hope that this has been impactful for you, and that as you're processing and thinking about the money that you're making, you're already starting to take decisions around what is it you need to forgo. In fact, I challenge you to take the next few days before our next episode to just think about, how am I living my life? Is this how I want to live for the rest of my life? Is the way I'm living guaranteeing me a future? Am I setting aside some income for the future? Am I taking time to gain knowledge? And where can I start to gain knowledge? We have several programs. Straightforward Financial Growth is one of those programs. And you can get in touch with us and we can get you into one of those. We have various programs, Couples and Money for Couples. We can take you through that as well. There are various books, Financial Fitness by Pastor Murithi Wanjao. We have Financial Foundations as well, also by Pastor Murithi Wanjao. Straightforward Financial Growth by Apostle Moses Mukisa. Kingdonomics, all these are books on wealth that begin you on the journey to understanding how to handle your money, but also how to invest. Stay with us, because this conversation isn't over yet. When we come back next time, we'll be talking about when we talk about objectives, how do we clarify our objectives? This has been Fearless Business, where we challenge you to go forth and be fearless.